Good morning, good afternoon, and good evening, folks. If you guys can hear me and if you guys can also see my screen, please give me a check by saying yes or no. Uh, okay, so there's a lot of people have actually already, the ones who are actually attend these webinars on a regular basis, they know that this is how we open the webinar by asking this particular question. So glad to see so many familiar faces as always. Okay, so that's really good. So for those of you who don't know anything about myself, allow me to introduce very briefly about me. So I work as a chief market analyst for AvaTrade. I come with a wealth of over 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon and as an equity trader with Bank of America. And every Wednesday over here at this time, we conduct our master class on various different topics. So as I can see, a lot of familiar names are already here, but some new people have also joined who are saying that this is the first time for them. So it is important to include them in our conversation as well. So today's masterclass is very much going to be focusing on the US non-farm payroll. So what is the role of this particular data, how this particular data influence the markets, and more importantly, which markets it really influence. That is what we will be discussing. In addition to that, of course, we'll be looking at some particular numbers. So what are those numbers or levels for various different derivatives, whether we are talking about the equity market, whether we are speaking of the Forex market. So we will look at all of them and then we'll see that, okay, where are those buy or sell zones, or which are known as support and resistance zone, where we could see those massive pivot levels. So that would be the part of our discussion. Amanuth, I think audio is working fine because no one has complained so far about the audio. So probably just your own issue with your microphone, with your headphones or something. So please have a look at that. Yeah, everyone is saying that the audio is really good on their side. Right, okay. So as always, before we continue, it is important for me to go through this disclaimer, meaning anything which we'll be discussing in this particular video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. This is purely for education purposes. Now, the next slide over here is about our contact details. So anything which will be discussed in this particular, if in this video or our general conversation, everything can be, you can see them on our YouTube channel and also on our Twitter channel. If you wanted to contact, the details are in front of you. The recording of this one will also be available, as I said, on our YouTube channel. So what is the agenda for our conversation today? Primarily, we'll be looking at the importance of the US NFP, what makes the US NFP reading, what instruments to really trade on back of that. And then in addition to that, we'll be looking at the current state of markets and analysis. From there onwards, we'll be moving to defining levels for those particular markets and then defining strategy. So if you guys have any questions in the meantime, so feel free to ask me. I'd be more than happy to answer all those questions as we go along. Otherwise, you can always ask me questions towards the end of our session as well, and I can also answer them at that as well. So now, the first question which really comes to mind is that where do we actually find the US non-farm payroll data? What is the source of really that information where we can find that sort of information. So in order to see that, of course, you can go to AvaTrade on our website. You will have the data over there as well. But this is also another valid data point for you guys to have a look at it on the Forex Factory. So on every Friday of every month, so the first Friday of every month, pretty much, we get this particular number. So the number comes on Friday. So let me click on calendar over here, and we're gonna go on to Friday. Once my computer will come back to life. So here we go. On the 4th of June, we are going to see this number popping up on the calendar over here at 1:30 p.m. GMT London time, not the GMT time. We get these three important numbers. Now, the first question is for those of you, the study question, for those of you who have attended my webinars previously, can you please tell me what is the US non-farm payroll number really? What is your understanding of the US non-farm payroll? If you have seen any of the previous videos, if you have attended any of the previous webinars, then you must know for this one by now. So some people are saying that the US non-farm payroll data is this is the jobs number, employment related. Excellent, David. That is absolutely, you are right. So number of worker excluding farm workers, Amutha, that is absolutely correct as well. So overall, what this data really sort of does is this gives us the information about this US economy, about the labor market, how the labor market is really performing in the United States. Because the Federal Reserve, which is the central bank in America, looks at this data very, very closely. And on back of that, the Federal Reserve decides on its monetary policy based on this number. So the Fed, let's just put it over here, which is the central bank, right? So this is equal CB. So they're going to look at these numbers very, very, very closely over here. And based on these numbers, the Federal Reserve is going to decide about its monetary policy. Or, I mean, this is the general view, because the Fed, one of the mandate for them is to push this number lower. The unemployment number previously was 6.1%. This time we are expecting this number to go down to 5.9%. So, and of course, we want this number over here to go back up, because last week we saw this number to come in at 266 when the expectations were 800 something, and this week we are expecting this number to show 645. So the bar sort of is really set quite high this week, because what we are expecting this week is a strong number. And then if this week's number on Friday comes anything short of this one, then we are very likely to see big moves in the market. Why? Because last time when this number missed the forecast of 800,000, what market was saying at that time is, okay, so this is one-off reading, that is fine, we can forgive this one. But this time, if this number once again comes lower than the expectation, market is not going to forgive this reading that easily, and it is going to influence the market very heavily. What derivatives are going to be influenced? We'll be talking about all of them in a lot more detail. But what I want you guys to focus for the time being, for the first 10 and 11 minutes, is to pay attention to two things. Number one, the last time we had a number which was 266, this number was much, much lower than the forecast. Market reacted very harshly to that number. This time we are expecting number 645. Remember, after reacting harshly, the market kind of thought that, okay, this is one of bad reading. we need to see consistency of these reading coming lower. So if this week we also get a reading which is close enough to 300 to 400,000, market is not going to forgive that number, and that is going to have a very harsh reaction in the market. So this is the key takeaway so far, what we really wanted to focus. Now, the question really is that what instruments are we going to see on back the big moves in the market on back of that? So first of all, we are going to see Forex market moving quite substantially on back of this one. Then after that, what we're going to see at the same time is we're going to see the equity market. The stock market is also going to see quite a lot of move on back of this number. So all the S&P 500, the Dow Jones, the S&P, the Nasdaq, they are also going to see a massive momentum on back of this number, and the Forex as well. And on top of that, then we have our fixed income market, which is also your treasury market is also going to see a big momentum on back of this one. Finally, it is going to be our commodity market. Gold prices really we are talking about over here. So gold price also going to see big moves on back of this number. So all of these four classes, asset classes, are very much likely to move when this number will be released at this time on Friday, on June the 4th. So I have highlighted the event for you guys, and I've also gave you guys how the numbers should be, or in what direction they could be. Well, okay, so if this number comes in very strong, we are likely to see gold prices moving further lower. We are likely to see euro, dollar, sterling moving lower. We are likely to see the equity market moving to the upside. Why? Because that would mean the economic strength in the economy. So that is the general consensus among investors and traders. Does that make sense to you guys so far, what we've discussed? Any questions on this particular point or on this particular topic that that we have discussed so far? Because it is very important that we discuss, that you guys are very clear on this one, because otherwise you're going to be very much confused on Friday with respect to this one. So now what I'm going to do is I'm going to bring out our MT4 platform, and on that we are going to define really the sort of a price levels, and then we're going to look at the price actions further. So Abbas, you're saying that what time is that? 1:30 p.m. time zone? That is the UK time zone that I am showing you guys, because I am obviously based in the United Kingdom in London. So you guys can adjust those time frames in according to your own time frames, whatever you guys are based in. So what is happening in the market now? The chart which is right in front of you currently is, let me just get rid of this one, get rid of this one. Okay, we'll just leave them because we'll just change the color to these ones too. Let me quickly change the color to these ones to green. Why green? If you guys are wondering why I'm changing the colors to green, because I'm gonna make them as our support zone, or also known as your buy zone. So our buy zones are very much represented by our green lines, and our red zones are very much, red line represents our resistance zone. So over here, this is our resistance zone. So this is represented as your sell area. So that is why I just kind of wanted to make a bit of a differentiation on the chart, because whenever I look at the chart, I just wanted to be very clear where is my buy zone. I'm not saying that the buy zone is currently here. I've just pushed these prices up. So first of all, we wanted to play some ground rules with respect to that. This is your Dow Jones 30, right? Which is also known as your the US 30. What we see is that since February last year, which is right over here, we have seen, without any doubt, we have seen a very, very strong trend, because this is when the prices were back in March last year, 2020. This is where we are currently in now, like in July right now, right? So clearly the trend has been very, very strong to the upside. So overall, we are in a very strong upward bull momentum, in a very strong upward bull market, right? In other words. Now, obviously, what we need to pay attention to is that where the market can really move on Friday. But before we do that, we need to define what are these three lines over here. These are your moving averages. So first of all, this is your 50-day simple moving average in pink. Followed by that is your 100-day simple moving average, and then finally your 200-day simple moving average. Now, for those of you who don't know how to put these moving averages on the chart, you go over here, insert, you go into indicators, you go into trend, and then you click on moving averages. Then the moving average chart kind of shows up. Over here, you have a period. Currently, it says 10. What you will do is you will change that to 50. You will leave this one as simple and close, and then from here you change the color to pink. That's it. That is what it is in pink, sort of in pink in 50-day simple moving average. Now, if you wanted to bring the 100-day simple moving average, you change the period to 100, leave everything as it is, and you put the color as orange. Now, after that, you have your 200-day simple moving average. Similarly, you change the period to 200, leave everything same, and then change the color to green. Now, why do we use this one? We use this one because this tells us the strength of the bull momentum. As long as the price continues to stay above the 50-day simple moving average, it tells us that the bulls are very much in control of the price. Of course, there are violations of those ones right over here, over here, over here, but pay attention. Every time the price moves below, it kind of moves up exactly from nearly from its 100-day simple moving average. If it breaks the 100-day simple moving average, then it bounces near its 200-day simple moving average. So it is safe to say that when the price breaks, these moving averages represent a good buying opportunity. At the same time, when the price breaks below these ones, like it did over here, it tells us that the bulls are losing control, bulls in control, and bulls lost control completely, and prices went all the way to touch this 18,000 sort of a price level for Dow Jones Industrial. So this shows that, fine, to conclude, what it shows is that as long as the price is trading above these moving averages, we are in a bull momentum. When it begins to drop below them, the bull momentum begins to fade and bears starts taking control of the market. Now, after defining this ground rule, what we're really going to look at is where are our previous resistance. So with respect to Dow Jones, it is this area of resistance that we are really talking about. But overall, if we look at the price action for the last number of days, what we really see is we have a consolidation happening in this area, because price is not really going anywhere. It is very much just moving in sideways direction. That is pretty much, it's been going on. So now the market needs new catalyst, either to break to the upside or either to break to the downside. Previously, we had two very close occasions where price did try to break below the 50-day simple moving average, but every time we had a move to the upside, as you can see over here, and as you can see over here. So both of these two break of 50-day simple moving averages, they were very much met by buying pressure. Now the price is moving to the upside. Now, one can certainly say that we do have an ascending sort of a triangle form I mean, like you could say ascending triangle, but it's more of a symmetrical triangle forming right over here. Let me just draw that triangle once again because it has become a little bit more funny. So excuse the straightness of the line because I'm just kind of drawing them like that. So, but what we have is a symmetrical triangle forming over here, where the price is sort of moving away from the lower line of that asymmetrical triangle and trying to push above the upper line of this symmetrical triangle, indicating that traders more want to push the price back to the upside. But that's okay. If they wanted to push the price back to the upside, what we need to pay attention to is that this is the area where we will be all focused on tomorrow, which runs between 34,780 to 35,046. Can the price break above this zone? Or will we form a double top? Because first top is already over here. Imagine the price comes over here, it fails and it consolidates, and then we move to the downside. That will confirm that right over here, what we have is a double top. A double top is a bearish pattern without any doubt. And that means that the price is more likely to move to the downside. If that happens tomorrow on back of the data, then the chances are the price is not going to be possibly bouncing from its 50-day simple moving average. In fact, we are going to move into this important area of support. So although I did say that, I am only putting these lines over here, not calling them as a support zone, but in reality, I looked at the price action and I looked at where the 100-day simple moving average was trading. I looked on the left-hand side and I looked at this area as a potential support area because this is where the rally kind of started quite strong to the upside. So that's where I put it on. Now, tomorrow, if the price comes into the resistance zone initially and then fails to break above that, we will know pretty much that the failure of breaking of this one means that the price is coming over here. However, if the price comes into this area and then it breaks out of this one, then this means that this over here is not going to happen. Now we're going to see a continuation pattern of the current trend, and then this particular trend, the whole trend is going to continue to move to the upside. Under those circumstances, you could potentially have your stop losses just right over here. Now that is with respect to the Dow Jones Industrial Average. That is true, David. What you're saying is true. So David is talking about the symmetrical sort of a price triangle, the one that we formed over here, but we know that it is already trying to break above that symmetrical triangle pattern. But yeah, great point over there. Guys, remember that you can always continue to post your questions, your comments, if you agree or disagree or anything while we are holding this this session, because this really gives you guys an opportunity to ask me questions. Now, the second sort of something important that we wanted to focus on over here is, of course, gold prices. Now, remember, we did say that gold is another potential where we could see a massive sort of a momentum. Now, if you are thinking that why have I not done the S&P 500 or the tech, the focus is very much the same for the S&P 500 index. It's once again, is this area, can we break above this area or not? If we're not, then we are very much likely to see a momentum moving towards this 100-day simple moving average, which is right over here. Because now quickly we'll change these ones to green just to differentiate, to show you guys the differentiation. But the concept and the analysis part of this one remains very much the same. So not much change. That's why I didn't really cover. With respect to the NASDAQ, however, there is a bit of a difference over here, because right now what we're really doing is we are struggling to stay above the 50-day simple moving average, which is right over here. And this indicates to us that if the price cannot break above the 50-day simple moving average, then we are likely to move towards the 200-day simple moving average, or even potentially we could go further to the downside as well. But right now, if the price cannot stay above that, then really we are potentially moving to this area of support. Again, I'm going to change the color of these support zones, or these also known as the buy zones, to green, just to make sure that we have the differentiation on the chart for them. Now, because these are our resistance zones, so let's change the color to these ones to red as well to keep things a bit more consistent. And for this one as well, I will change the color to red over here. Again, the concept is we're going to remain very much the same, but right now over here, we're just waiting, can the price stay above? If it can, then it is going to go into this area of resistance. If it can't, then we are likely to see a momentum over here. Now, with respect to gold prices, guys, we have done a very excellent technical analysis video yesterday. We talked about the potential of this double bottom when it formed in our previous videos. We kind of pointed this area out previously. And on top of that, yesterday, we also pointed out the possibility of resistance price shying off from these particular price levels. And then that is exactly what has happened over here. Now, in terms of a support zone, what we really sort of focused on with respect to this one is this area 1842 to, let's say, 18 sort of 22 sort of an area. So that is the immediate sort of an area where we could potentially see a support zone again, or the buying pressure coming in, because this is a support. So I'm going to change the color to green for you guys to make it understand. Let me just change that. So if you wanted to have a bit more information on gold price on our YouTube channel, we did do that. But overall, when we look at gold price, there is no doubt that there's a lot of bullish momentum coming. The reason that I am saying that is because the 50 has crossed above the 100, which is bullish, and it is also about to cross above the 200-day simple moving average as well. Now, as for tomorrow, obviously we're not going to see the momentum coming all the way to here. As for tomorrow, what we really kind of wanted to see is that if there is some sort of a pullback from on the back of this data, then what we really sort of wanted to see is on the 4-hour time frame, this level 1870 to 1877 sort of a price level that we'll be very much focusing on as our first sort of a support zone. If the price moves to the downside, the chances are that the price is going to move to the downside because we have already tested the 50-day simple moving average on the 4-hour time frame too quickly, or way too quickly, and the price that shows that the price is already finding its resistance at its current levels, which is right over here. So meaning that the price is likely to break to the downside. The momentum isn't really strong enough. But at the same time, if we look at the trend from here to here, we can say that the overall trend is still going to pick up after a small retracement. The small retracement is more likely to happen because RSI is also oversold overbought for a long period of time, and we do expect a retracement, and that retracement could be over here, number one, and the second retracement could be over here. All right, folks. So you can watch the recording of this one on our YouTube channel, which is AvaTrade. So this kind of brings nicely towards the end of our session. My channel is called, sorry, my YouTube channel is called Naeem Aslam. If you're looking for my specific channel. Right. Okay, folks. Thank you once again. Enjoy, and I will see you guys next time. Okay, let me just pop that over here. Give me 1 second. If I can pop that in the chat to everyone. Type message here. This is my YouTube channel under my name. Hit subscribe and you will continue to see all the new videos coming from my channel as well. All right, thank you. Enjoy. Bye-bye.